Hello everyone, hope you all are doing well and welcome back to the Baking Analyst channel. On this channel, we cover everything from cryptocurrencies to economics to personal finance with a focus on DeFi and yield farming as a wealth building tool. So if that sounds like something interesting to you, do consider leaving a like and subscribing to the channel. If you're completely new to the world of DeFi and you're wondering how on earth these people are staking their pairs of cryptocurrencies on decentralized protocols and earning a decent passive income from it, well, I actually have a free online beginner course for you down in the description below. You can get it using a free trial of Skillshare, cancel it at any time, and it will come to you at no cost whatsoever. Today, we'll be addressing the elephant in the room, the war that has broken out in Ukraine, what it means for DeFi, and why this conflict means that DeFi education is, in my opinion, more important than ever before. Now, before we go into Shilling DeFi as a solution to economic crisis, as well as how you can make gains from DeFi, let's first recognize that this conflict, this geopolitical conflict, is a very sensitive topic. I do understand that there are quite a number of audiences from Slavic origin on this channel. I thought it would be only right to acknowledge that, above all else, this crisis is a humanitarian one, both for the people of Ukraine as well as the regular citizens or even soldiers of Russia who have been sent to fight, apparently not knowing that they were there to kill. So definitely heart goes out to anyone who is involved or has been affected by this conflict against their will. At this point, it is also an opportune moment to talk about how the crypto community has been rallying around the humanitarian efforts regarding the war. And one interesting opportunity that has dropped into my mailbox is one from Nexo. Now, Nexo is a pretty established crypto brokerage that allows you to earn staking yields on cryptos and stablecoins, and they are actually matching customer donations. So, if donation is something that you're looking to do, then using Nexo, you'll actually be able to double your contribution. And if you use the link in the description down below, you can get $25 as a bonus if you deposit $100 worth of any sort of currency into Nexo, which means that you can then take that bonus, you can give it away and essentially have $50 of impact, or you can channel it to any other purpose that you so please. With that out of the way, let's jump right into today's video. From a portfolio perspective, we as a crypto community or DeFi community have been relatively shielded from the effects of this whole crisis, simply because there has been a surge in demand for cryptocurrencies, mitigating potential losses. We'll be doing a separate, more detailed March portfolio update video in due course, where I'll go through which farms I am on and how much I'm making from these farms, just as an update from last month. But today, what we want to talk about is why DeFi education has become more important than ever during this crisis, and what this crisis has shown us about the potential of DeFi. And the reason for making this video is that I see a lot of videos talking about crypto in general, but no one really mentions DeFi and the protocols, as well as the role they may play in mitigating economic crisis for many. In this video, we'll be talking a bit about the implications for the people of Ukraine, the implications for the people of Russia, and of course, that for everyone else. And the reason why I think it is important to consider the impacts from various perspectives, even though some may characterize Russia as the aggressor in this case, at the end of the day, in my view, war is really a tool for the political elite of the world to engage in power struggles and incur huge costs, and these costs are ultimately incurred both in terms of humanitarian costs as well as economic costs by the common citizen. So if we think of it just as in a military war, where both sides will tend to try to negotiate a humanitarian corridor for civilians, in this case, DeFi can potentially serve as a humanitarian corridor for the regular citizens who are caught in an economic crossfire through no fault of their own. So the first lesson that we can all take away from this crisis is that fiat really is a denomination of faith in the government, and fiat is actually Latin for let it be done, meaning that fiat is issued by a centralized authority, and if the continued operation or viability of this authority is called into question, then we are going to see a problem with fiat as a store of value. Fiat only has value because someone else believes that it has value within that particular jurisdiction. And so if we go on to look at the impacts economically on the people of Ukraine, we see that the going concern or the continued existence of the Ukrainian government and the underlying currency that they issue is currently under military threat. And as you can see from the exchange rate between the Ukrainian hryvnia and the US dollar, we can see that this is kind of priced into the market right now. Another problem that we saw when this war first broke out was the forex controls and the suspension of payments in Ukrainian currency, which means that people are having their purchasing power suspended. If we take a look at this article, which is unfortunately behind a paywall, we see that Ukrainian credit cards have stopped working and they have to rely on crypto. People might not be able to use their cards to spend money the way they usually would, and in the case of holding crypto or being in DeFi, for example, they might be able to, say, get a free crypto.com card and use that to spend it instead in euros. Then we also see that Ukraine has limited cash withdrawals and banned forex purchases, possibly to protect the currency and mass bank runs. And this again shows the problem of people's purchasing power getting suspended. And this could then lead on to a humanitarian crisis where people who might be fleeing the capital might not be able to have access to the resources that they had accumulated over their lifetimes. So these two perspectives have already been covered copiously in other crypto channels probably. The answer to these two problems can be found in a store value that is not controlled by one centralized authority or dependent on the continued existence of a government, which people argue can be found in crypto. And then we move on to the negative impacts on the regular Russian citizen. First of all, coming from a DeFi lens, we see that what has happened is essentially a Rouble rug pull. In case you're not familiar with what happened, essentially some Russian banks got shut out of the SWIFT system, and the SWIFT system is a messaging system that allows banks to transmit financial information, verify transactions, and therefore be able to conduct transactions across borders. So after the announcement of the SWIFT bans, the Russian ruble actually crashed about 30 to 40%. As we can see, it used to be 0.013 of a US dollar and now is sitting at 0.0081. So the regular Russian citizens, or those normal working class citizens, right, have had their savings or their purchasing power wiped out by 40% or more. Suffice to say, if this happened to anyone, no one is going to be happy about this. So what does this sound like? This sounds a bit like one of those Rugpull events where the devs just mint a lot of tokens and dump all the tokens, causing the price to crash and the holders of this token to be in the red. Now, this is not the only aspect of how holders of the ruble or the regular Russian people have been rug pulled. There's now a limit of cash exports in Russian ruble of 10,000 US dollars in value. This is obviously a means to prop up the ruble and prevent it from crashing even further. And what does this remind us of in DeFi? This reminds us of tokens that you try to sell in a decentralized exchange and then just pops up an error message because it's been hard-coded into the contract that you're not allowed to sell, just like the Squid Game token. And then there's also the issue of exit liquidity to the ruble. Now that there are so many Western countries that are imposing sanctions on Russia, what we're also going to see is that money changers or banks outside of Russia, such as those in Europe or other so-called safe haven countries where Russian citizens might want to emigrate to avoid economic crisis, they might not want to accept Russian rubles, or they might only do so at really unfavorable rates. Now, of course, the Bank of Russia, Russian central bank, has hiked interest rates to 20% in a bid to encourage people to hold on to the ruble, switch their forex for ruble, and prop up the exchange rate. But when you think about it from a DeFi lens, if you've been in this space for long enough, is that 20% interest really enough for people to be holding on to an asset with an unpredictable future? Looking at the 20% number, we are instantly reminded of Anchor Protocol and their stablecoin. So the answer is, if the UST holds its value pegged to the US dollar, which is considerably more certain at this point, well, the answer is likely to be the negative. And therefore, this is going to spark off a chase for yields. And well, what are us yield farmers all about, right? We're all about crazy high yields. And that is something that not too many people know about and would benefit from learning. Finally, we move on to the implications of this war for everyone else in the world. Now, as mentioned ad nauseum in the news, Russia is one of the world's biggest exporters of natural gas. Europe is very dependent on natural gas for energy. Energy prices have already been skyrocketing even before the outbreak of this invasion, this war in Ukraine. And this huge increase in natural resource prices and sudden supply shock of oil due to sanctions on Russia could lead to stagflation, which is a case of high inflation and little economic growth. And the reason for this is oil is also a factor of production, meaning that oil is needed for businesses, companies to produce things and generate economic opportunities such as employment and sales. So when people in Western countries face stagflation, what can they possibly invest in? Well, inflation is too high. Bonds are not going to do any good. Leaving the cash in a bank is just going to lead to erosion of real purchasing power. The equity markets might go into a bear market. They might not like the idea of a recession or slowed economic growth. And of course, there's also the constant threat of escalation of this conflict and spillover, which could lead to jitters when investing in speculative assets, right? So what is the way to go about doing this? Well, for one, if we're in DeFi, we could look at lowered volatility pairs if we're scared of the volatility, or we could look for really high yields in order to try to beat stagflation. All in all, this has been a video on my thoughts on how DeFi education has become more important than ever and what this war means for DeFi in general. While this video has focused purely on the economic aspects, this is not in any way meant to diminish or subordinate the human suffering that is going on in the region. It is just that this is more my area of expertise. So I hope this video has been informative and useful. If you did like this video, do consider leaving a like down below. I'd also like to point out that we have soft launched our Discord channel, and on this Discord channel, we have a growing community of yield farmers who are really open to sharing their alpha and sharing different projects that I might not have the time and exposure to cover on this channel. One of such projects that is definitely heating up is DeFi. If you want me to cover that, also please leave a comment down below and we will have a look into that. So hope you've enjoyed this video. Thanks for watching and I'll see you in the next one.